on YouTube, on, excuse me, I should be like, I'm going to start that again. Okay, cool. We'll edit this out afterwards. We should be live on YouTube, Facebook, and Twitter right now. And today I'd like to cover the topic of currency wars and everything that's happened since last time I went live. So I'm going to do a bit of screen sharing today as well and go through some of the headlines, and we'll review. I promised on my YouTube channel that I would review things as they roll out. So first thing, in terms of currency wars, I'll just review the video that I want everyone to have a look at. And let's go to the screen share, is the whole video that I created on the real estate market crash. So let me see if I can get the tech together. And this is the video that hopefully you should be referring back to. I talked about the real estate market crash and how everything can pan out from this health crisis as it leads to an economic crisis and eventually a financial crisis, and the 10 steps. So since then, a few things has happened, and I'm going to, if you see on your screen right now, you should see me and the video, so you can check it out. And once this broadcast is through, head over to my YouTube channel, Simon Dixon, and I'll put the links in the description so you can find everything very easily. But I just want to go through some of the 10 steps that are starting to roll out right away. And so if we go through those 10 steps and you head over to step 2, I talked about this concept of, sorry, the sun is shining and it's very hard to see my screen right now. Banks starting to come under pressure. So we have seen now the first bank in the US that actually went under the pressure of the credit risk. Now, there's very important things to understand here. I talked about the simplified model where banks actually, when they issue a loan, they create brand new money. So when people default on their loans, money disappears and it harms the balance sheet of the bank, which creates pressure because all money is created as debt. We have started to see that. Now, there's a couple of things to distinguish between. There is the concept of a bank taking on balance sheet risk, which is where the bank actually takes on the liability and the risk. And in which case, if they have a lot of exposure, this is what in the last financial crisis they called toxic assets, then it can lead to these failures in banks. Now, this one wasn't catastrophic because a larger bank came along and essentially acquired it. But this is kind of like the first signs we're seeing. Now, many commentators will say that the banks are in a lot stronger position than they were during the last financial crisis. Now, what we've seen is that the central banks are putting interest rates down to zero, the major central banks. But in fact, the debt, the rate to borrow right now for a business or an individual or somebody that wants to take on a mortgage is actually increasing. So what that means is the banks are deciding to recapitalize themselves even further. They're taking the money that they can get access to at the central bank as almost 0%. And they're increasing the rate that they charge to their consumers and lenders because of the higher risk environment that the economy is in right now. And that additional margin that they're making, they're putting on their balance sheet in order to try and create some recapitalization of the bank and strengthen the amount of time that they can sustain these negative defaults on these loans. Also, remember that there is also the concept, it's not just banks, it's the non-bank financial institution. Many of these loans are repackaged through the investment bank and sold to your pension. So a lot of the liability you actually hold because the bank has resold it to your pension. And depending on what your pension is investing in and what different funds that you might have invested in or some of the hedge funds, they will have different degrees of exposure. So obviously your pension can't take leverage. So some of the hedge funds that went down first in the financial crisis were the ones that were using leverage to invest in these debt products that were sold to them by the bank, that were created by the investment bank, where essentially they took all these bad toxic assets and loans, packaged them up through the investment bank and sold them to some of these. The hedge funds were actually borrowing money in order to get exposure to them. But your pension can't actually do that because it can't invest in exotic derivatives. So it often holds packaged products that has a lot of the exposure. So this creates two different scenarios that could take this in two different directions. One is the pension crisis, whereby the value of people's pension starts to decrease as a result of these assets. But the second is also the systemic risk in the banking system, whereby this can have knock-on effects on the bank. One of the things that I've promised to do in future broadcasts is help people understand some of the strategies that I've actually implemented in order to spread exposure to banks and how you can actually do that. I got a lot of questions about, their pension, and I can't give individual financial advice. All I can share with you is some of the products that exist in order to help people, reduce some of that exposure, so you can be more diversified in different situations that rule out. And I can obviously share some of the things that I've actually done personally to reduce some of that exposure. And I'll make sure I cover that in future episodes. So step 2 that I talked about in the 10 steps was that people defaulting on their debts leads to bank failures. And we've already seen the first one, but we've also seen that the banks are taking advantage of the low interest rate environment to also recapitalize to see if they can push this further. But we'll see how long the exposure goes in terms of the general debt level of the population right now. So that's that one. Also covering some other headlines. I talked about in step 6 was that central banks will start issuing their own digital currencies and essentially let the banks go bust. Now, half of that central banks have all been preparing for already, but we're already starting to see this. And this will also tie into the currency war situation that I think we're about to, we're going to have. And then I'm also going to go through the 3 outcomes that I'm looking for as a result of this. And as I said, what I'll promise to do is kind of review things as they come through. But we're already starting to see some more aggressive action in terms of central banks. So we're starting to see lawmakers relook at the digital dollar. Now, what I want to refer people to is a video which I'll share with you. I created a video last year called the 6 types of money and who profits from them. Now, while people might not understand the difference between a digital dollar and the digital currency that you already have in the form of when you log into your online banking, in that video, the 6 types of money and who profits from them, I explain the exact difference. When central banks create a digital dollar, it is a radical banking reform. The reason is because when the digital currency, the digital dollar that exists right now, which is in your bank, remember, when you log into your online banking, if you have a positive balance, it corresponds to somebody else's debt, which means that every positive balance in your bank account means somebody else is in debt. And so when central banks issue the digital dollar, it is not backed by debt. No debt needs to exist in order to create it. It is actually how the majority of normal people would think that central bank, that money is actually created by a central bank. But the digital dollar is a really radical banking reform. And when I go through the currency wars section in this video, I'll explain how that leads to an interesting dynamic that we might see roll out. So in the US, they're looking at the digital dollar. And that was step 6 that I covered in the 10 steps that I think will be coming next. In step 8, I talked about how helicopter money will be delivered to all via a digital wallet. Now, we're really starting, we're not quite seeing it exactly yet how I was talking about there. But what we are starting to see is new innovation in China. So in China, they've been working on their central bank digital currency, and we're starting to see the first rollout now of the digital yuan or renminbi. Here you can see what this is. Now, the central bank have created, the China central bank have started to launch out a system called the central, let me remember exactly, let me get the exact name for it. All these different things are moving so fast at the moment. What did they call it? So I think I've got another article on it right now, but I'll go through. I'm forecasting, oh, I've got it in another article in this video. Sorry, I'm a bit disorganized today. So much is happening, trying a new format. Let me know what you think of these formats, but trying to get some more screen interaction as well. But yeah, we're starting to see that in China, the central bank is being rolled out. Now, the way that they're rolling it out is they're allowing companies that the banks in China to be the first adopters, then some of the more technology-based companies like WeChat Pay, Alipay, which essentially disrupted cash in China to a large extent, and then it will be rolled out. Now, I think we're still going to start to see some of those helicopter money bailouts introduced via a central bank digital currency. So that was step 8 that I discussed in the whole process. Back to that. Central bank issues digital currency and lets banks go bust. Now, we haven't seen the banks go and bust yet. We just started to see the failures. But now this helicopter money concept exists, which will roll out a digital wallet to many, many more people. And they will be incentivized to do that by getting access to some kind of cash incentive. So therefore, everybody subscribes to that. Now, think of the effects that they can do that. That can make you opt in to some of these coronavirus tracing methodologies. So this currency is already starting to be, more of an infringement upon privacy than we've actually seen with traditional currencies created by a bank or cash, obviously. And so a lot of these effects are starting to actually build out. Now, what's interesting is step 9 that I talked about in the real estate market crash and the 10 steps that comes next. I talked about FinTech companies building on this API key. So what we're seeing with this central bank digital currency is that they're going to be allowing a lot of the technology companies in the rollout strategy to build on top of it. And so this is how you get the central bank not performing necessarily all of the customer service and everything. We already started to get announcements of the central banks, how they're going to roll out their digital currency usage. For those of you that I talked about this video called The 6 Types of Money. This is the video, so you can look it up on Simon Dixon on YouTube. And if you want to see how this all rolls out in real time, obviously subscribe to my YouTube channel and like this video, share this video. We want to have more people that gain access to this type of information so we can share this journey together in real time. But this is the educational video I created last year in understanding these different forms of money and who profits from them. So let's look at the next article as well. We're starting to see more unconventional types of methodologies used by central banks. Now, there's not really much to this, but what has happened right now is the Bank of England has actually decided to sidestep the bond market and the debt capital markets. So rather than having to go through the process of governments issuing bonds and then central banks purchasing those bonds, known as quantitative easing, the Bank of England has just decided to implement an overdraft facility where it can sidestep the debt capital markets and the bond markets and actually get that money. Now, this is very similar to quantitative easing, but essentially it's reducing the time frame by not having to create these debt products. And I'll be interested to watch what comes next from this. But the Bank of England has started to use unconventional methodologies on top of their quantitative easing, on top of the reduction of interest rates, and that is extending a bank overdraft, which is essentially how the Bank of England, returning to its roots in 1694, when it was created in order to fund wars, when governments had shortfalls in order to fund those. So that's the next thing that we're starting to see. So we're seeing more unconventional methods. Now, another thing that's really interesting is, remember now, we're getting all these central bank digital currencies, but the FSB has published a report now, which is interesting timing, on the stability of stablecoins. So let's have a look at that article. So this is the Stability Board. And they're starting to actually think about regulatory frameworks for stable coins. Now, if you watch the 6 forms of money and who profits from them, I do want to disclaim, I try to, disclose my self-interest wherever I can so that people can discount this information. But I am a shareholder in a company called Bitfinex, and Bitfinex have a sister company called Tether, and Tether was the first stablecoin that invented this concept. I'm also a shareholder in Circle and Coinbase via Bank to the Future, which created the stablecoin USDC, which is 2 of the largest stablecoins, which are having a lot, massive increases in deposits at the moment. In future videos, I'll make sure that I cover these things for those of you that are interested in stablecoins and what they mean, what the risks are, and what the benefits are of those. But essentially now the Stability Board is actually putting together regulatory frameworks for stable coins and starting to recognize that, especially as in previous videos I discussed live when Facebook was launching the Libra project, which is obviously calming down right now in light of the regulatory challenges as a lot of these central bank digital currencies start to be used. But this all came from that first stable coin that we talked about, which was Tether, in different videos. So those are some of the background information that I wanted to put together so that I can start to actually go through some of the digital currency wars and what I think we're going to see from here. So let's have a look at the other articles I've got. If you want to understand some of these relationships, I recommend checking out this video, which is a video I created on the India financial crisis. And I talked about the concept of importing and exporting countries. Now I'm going to go through that concept right now and how it relates to the upcoming currency wars. But that's the video where I went deeper into the relationship between organizations like the World Bank, the IMF, and India, which is actually taking on the giant sum of the World Bank finance at the moment. So I'm going to actually, because it's distracting me a little bit, just go back to me face to camera, and that's the experiment over with the different things. So here's the main topic that I wanted to cover. So I talked about that concept of currency wars. We are starting in the middle of this coronavirus pandemic, to actually start to see the currency wars roll out. And the first move many, many years ago, approximately some of my really early videos, I think there was a video about 6 years ago on my YouTube channel, Simon Dixon, where I talked about the digital currency by the People's Bank of China, and how in 2013, China started to deliberately make moves to release documentaries on government-controlled television programs around Bitcoin. And my interpretation of that move in 2013 was that they were looking to actually start to experiment with things that might be, a risk to the dollar in terms of currency wars. Now, since then, China has flip-flopped in and out, and now they've started to release their own digital currency using some of the technology behind Bitcoin, but taking out some of the apolitical, decentralized properties of it as well. So the main currency war really is some of the politics that we're seeing right now. So prior to this health crisis, China and America were engaged in a trade war. And the whole point of the trade war was that China, a net exporter, is incentivized in order to devalue its currency. So when a country gets more exports, what tends to happen, if you look at the video I created on the India financial crisis, is the country that one country can get crippled with some debt money, and then the flow of funds that I went through. But as China is a net exporter, it benefits from devaluing its currency so that goods are cheaper. When you have a country that is a net importer, then it benefits from a strong currency if you're engaging in a global economy, because that currency then can allow you to buy more goods abroad, but it has a negative impact on goods consumed in the global economy. That's why we ended up with this interesting relationship. I think it was, I recently met Neil Ferguson. One of the books I read way back in 2009, 2010 was The Ascent of Money. Prior to this health crisis, I was in Silicon Valley and the Bay Area, and went to Stanford to meet Neil Ferguson. And he came up with this concept of Chimerica. And Chimerica highlights the fact that China relies upon America to be the largest consumer of its export goods. And America relies upon China in order to import goods so that it can build like great products like Apple's phones and things like that. But because America is importing more goods than it exports, it has a very robust debt capital market, a bond market, and it created treasuries, which all central banks have used as one of their assets to hold their reserves and receive interest by lending money to the US government. So the US government debt has been increasing by trillions and trillions and trillions, and we've recently added another 6 trillion to that by the central banks essentially purchasing government bonds and adding and increasing that good debt cycle. So I'm forecasting in the not too distant future, you'll see a US debt through the treasuries of approximately 30 trillion. And that is held by central banks, many central banks all around the world, as they have lent, as the US dollar negotiated after the World War, when it created radical reform through the Bretton Woods agreements, when it negotiated itself to be the reserve currency. And when in 71 it came off the gold standard and we went over to the fiat standard, you started to see that the US dollar started to strengthen and strengthen and strengthen because of its ability to roll out its debt capital markets. And then central banks around the world started to hold treasuries alongside gold. So you got to look at, in future videos, I'll try and cover how to follow central banks and some of the differences that you can follow as an individual. But essentially, they're holding their own domestic currency. They're holding US dollars, which are invested in the forms of treasuries, which is loans to the US government, and then commodity assets like gold. But essentially, it just means that China, in its currency wars, has an interest in the US government remaining business as usual, because it owns so many of those treasuries, and defaults and credit rating downgrades to US treasuries would have massive destabilizing effect on the Chinese central bank and the balance and the assets that they hold at the People's Banks of China. So you get this kind of collaboration between America, the largest importer and consumer of goods, and China, the largest exporter and producer of goods. And you have this whole concept that I covered of an importing currency versus an exporting currency. Now, this is why I think short term, and again, you can't take this as financial advice, but the way that I'm positioning myself is that short term, I think you'll continue to see a strengthening of the dollar as other currencies that don't have access to the resources that US has in terms of being a world reserve currency. I think you're going to see them weakening to the dollar in general on the short term. And that's something we've already seen, and I think we'll continue to see because of that very reason, that most countries hold US treasuries on their balance sheet as one of the assets, as a world reserve asset class. Now, what comes next is what becomes really interesting. When central banks are issuing these digital currencies, they're essentially waging war on traditional banks. The reason being is because traditionally, the central banks have used interest rates in order to control how much money the retail banks actually lend to people. Now, while banks will probably stop lending and governments are trying to ask them to lend more to re-stimulate the economy, that creates systemic risk in itself because it's asking the banks to essentially take more risk in a high-risk environment. So central banks issuing their digital currency is essentially a tool that allows banks to go bust, but people not to lose their deposits. So we're getting this interesting dynamic. Now, remember, people talk about the Federal Reserve is a private company, which it is, which is a cartel of private banks that founded it, which is the case. But many central banks around the world are not in that same situation. They are independent organizations. They have been nationalized, and so there are different countries are in different scenarios. So one size does not fit all in these currency wars. But essentially, you're seeing retail banks, central banks compete. And then if you see the video that I created on the Indian financial crisis, you then have organizations like the World Bank and International Monetary Fund, which will also be, so if you look at central banks like the European Central Bank, that's an example of a global central bank that essentially a group of countries have to try and get their monetary policy from, which is very dangerous for the individual countries within Europe. At least, in England, they maintained the Bank of England, which means that they can control their own monetary policy independent of other countries. But also this happens at the global scale. So the end result is that you want to see organizations like the World Bank are obviously going to want one global digital currency, which can then bail out central banks that might be taking on a lot of these toxic assets, because those central banks are taking on a lot of these toxic assets from retail banks. And eventually that can go to, the end goal, essentially, of one global digital currency. Now, what I'm forecasting here is 3 outcomes as a result of some of these currency wars. So remember, I don't think we're going to see a situation. So China, obviously, with its digital currency, trying to be the first mover, wants to compete with the dollar and try and get more and more central banks to hold the digital version of the yuan, renminbi, whatever they're going to call it, and actually strengthen their power as the next world reserve currency. So the central banks, and I talked about one video as well. Sorry, I'm referring to so many videos. I talked about in last year, before any of this crisis situation, how Bitcoin could become a global digital currency by 2020 as a result of the game theoretical situations between different central banks. If you haven't seen that video, you can check it out. But essentially, I'm forecasting 3 outcomes that I'm positioning myself for. Firstly, stablecoin growth. A lot of countries that hold currencies that are devaluing against the short-term strength of the dollar will be using stablecoins in order to onboard and get dollar exposure. Now, I'll try and cover that in a future video because that comes with its own risks. And it's very important if people are following that strategy to understand it. But also some countries operate off, countries like China and various other countries obviously have currency controls. So they control the amount of money that you can hold in foreign currencies while they manipulate and devalue. So countries like China, in order to export more goods, to make their goods cheaper to everybody, they have currency controls, which reduces the outflow from the Chinese yuan to currencies like the dollar. And then it also allows them to devalue the currency so that it so that they can export more goods, which is what many of the trade wars were about. And this is one of the mechanisms. Now, this is why I don't forecast the renminbi and this digital currency that is being created in China to be a winner in terms of displacing the dollar, because their economy is set up whereby the dollar would strengthen, the renminbi would weaken in order to continue the business as usual that we've seen that allowed their economy to grow. So I don't forecast that type of thing. So again, I'm forecasting stablecoin growth as countries try to get exposure to the dollar, using interesting, easy methodologies, and we've seen that already. I talked about, some of my positions. So, but the tether has already gone up to $6 billion a market cap when it was $3 billion not long ago, a low of $2 billion more recently. And we've seen USDC increase to about $600 to $700 million when before it was about $200 million for a long time. So we're starting to see that inflow into stable coins. I'm also forecasting short-term US dollar strength, and that will also be driving trend one, because some of these stable coins will be denominated in dollars, and therefore that's why we're getting a big increase in the regulatory push to look at this, because obviously this is very unconventional, that this innovation exists at the same time as many countries trying to figure out the economic and financial crisis. So I'm forecasting, again, don't use this as financial advice. This is just me, some of the things that I'm doing and positioning for. US dollar short-term strength. But in that trend to create and move towards that global one digital currency, I do believe that more and more people are going to want an apolitical. And again, if you've known me for a long time, you know that I also am a holder of Bitcoin. So, feel free to discount this as self-interest and use your own, subjective thinking. My goal is to educate you so you can make better decisions on your own on where you think this is going. But I'm forecasting long-term Bitcoin strength as a result of this. The reason for that is because we're already starting to see, as a result of this health crisis, that some of the digital currencies that are going to come up, they're going to use that to implement additional policies whereby, you have to have been a vaccine, for example, and in order to access that money. And if you access that money, it's also likely to hold, download it to your phone and have tracing, privacy policies in there as well. And therefore, this is going to cause many infringements on privacy. Now, initially, it will be used as a solution to the health crisis. But what happens after the health crisis? Do these things continue to stay in existence? My guess is that one step at a time, they start to be used for more things, which is at the end of the day, many people, many of the policies will be pitched in the form of protector. So look at what happened after the 9/11 situation. Because of the global awareness and fear of terrorism, things like the Patriot Act were put in place in this case of the US, and anti-money laundering laws were implemented globally all around the world. But then they obviously stayed, that continues to stay as governments believe that terrorism is a threat, that they need to continually go. So the anti-money laundering laws get stronger and stronger and stronger. But at some point, the line between privacy, freedom, human rights starts to blur with these health crisis policies, these anti-money laundering policies, and really it ends up really about global tax collection, and each country making sure that they can enforce global tax collection in an increasingly globalized environment, where people are starting to have many different forms of money. So for that reason, I'm forecasting an increase in the desire for people to have apolitical, fixed supply forms of money that can be spent. Now, that's not for tax evasion reasons, because every country will have their own tax policies. And Bitcoin is not exempt from tax. This is not tax advice. But the main strength of Bitcoin is the fact that the supply cannot change. A lot of these central bank digital currencies will change their supply for political reasons, and quite rightly, every country has the right to print their own money. They outsourced it to the private banking sector, which has put us in this Ponzi scheme, which is a private form of money called fractional reserve banking, where they created a digital currency backed by debt every time someone issues a loan, which drives more people, more companies, and more consumers and more governments into debt in order to have an economy, which is a Ponzi scheme essentially. But every country does have the right to create their own currency, but the currency has to compete in an environment with public currencies like Bitcoin, where you can have an exit. And so while these currencies will be optimizing for what's right or what the government believe through their democratic or not democratic process, what is right for their country, that leads to the increasing in supply of these digital currencies and a desire for people to go to more hard assets like gold and Bitcoin. So these are some of the things that I'm forecasting, and the currency wars are starting right now. It will all be done in the name of the health crisis, and I don't subscribe to going too deep into conspiracy theories. This is just an economic reality that we are in this health crisis situation, which will lead to an economic crisis and actions that governments and central banks and banks need to take, which then lead to the financial crisis and some of the trends that I'm forecasting and repositioning for. So, you don't have to get too conspiratorial in any of these things, but it's just a systemic system that is going to go through so many changes. And now governments are taking back their country's right to create money rather than create it through the private banking sector, which I think is also going to drive people through competition into our world's best shot at achieving digital sound money, which I consider to be Bitcoin. So these trends, so these are some of the three outcomes. I covered a lot of ground there, and sorry, it was a little bit shaky in the beginning, but I'm going to also just let me know what other topics you'd like to see. What is starting to become apparent is that I'm giving lots of information, and you can continue to subscribe on my YouTube channel at Simon Dixon, and I'll keep giving these updates as new things happen. But what's really becoming apparent is that I'm getting more and more questions from people around what types of things they can do. Now, I can't give financial advice, but what I'm going to try and do is package all of this information up into one place where all of this information can be accessed. Not necessarily, I'll continue my YouTube channel, so subscribe to it, and I'll keep giving the live commentary. But I'm going to try and put something into a format which is a lot easier for people to understand and implement, and that kind of pushes these different things together. So I'm not sure if everyone would like to see that. If you'd like to see that, then let me know in the comments what you would like to see. Because I said my commitment to people was to try and give updates on the financial crisis and the situation. Currency wars is the next situation that we're going to see as this all unfolds. So let me know what you would like to see in future videos. Also, the way the YouTube algorithm works, like this video, share this video, retweet this video, subscribe to my YouTube channel, hit the bell symbol, and I'll continue to give updates and information like this as everything unfolds. So thank you for your time. Over and out. Peace, and I will see you in future videos.